Warning. The United States government has issued a civil warning for all citizens of the United States.
We're going live. We'll do it live.
This is the Come On Man podcast. And here's your host, Paul Bauer.
What's going on, guys? Joining me from Red One Studios in Las Vegas, this emergency live stream is Charlie Engler and Miguel Munoz, the Red Pill's resident crypto experts. Enrollment is now open for their Q3 crypto mindset course. The link's in the chat and the description, but more importantly, we're going to talk about what the hell is happening with crypto right now. What's going on, guys? How are you doing?
Hey, doing pretty good.
Doing good, brother. Man, I'm feeling like Santa Claus right now, man. We're bringing the crypto word.
you're out there spreading the gospel. You're like Paul and spreading the gospel of crypto.
Yeah, we're like Paul, between Paul and Jehovah's Witnesses. Depends. No, no. The thing about crypto right now is we're in the last I would say 20 to 30% of a bear market, and so whenever we get to that point. This is usually once every 4 years with Bitcoin's 4-year cycle. And whenever we get to that point, there's a mixture of anger, depression, and disbelief is the three main emotions that people go through. And disbelief meaning people get to a point, and we're talking about the general public, right? Our audience is more value investor focused and like, hey, we know this is coming. We're planning for this kind of thing. Whereas everybody on Twitter is like, oh my gosh, it's going to go to zero tomorrow. And Bitcoin hit 100,000 last year, so it's definitely not going anywhere. Right. So I remember when I first started my YouTube, which has since been banned, but we'll be back maybe in a few.
I was wondering about that because I was trying to tag you and I was like, why can't I tag him?
yeah, you got to go to Cultivate Crypto and How to Cultivate Crypto on Rumble. Those are my user and then channel account there. I won't say too much publicly until we get it back. But once we get it back, there's just some. It was what do you call it? It said harmful and dangerous policy guideline. If you read that guideline, it's like you're telling people to jump off a bridge or something, And I'm like, I got like the cleanest crypto channel on earth, right? And it's like, other crypto channels, there'll be people talking about pump and dumps and stuff like that, and we're, so it's one of those things where you just got to deal with some BS in a bear market, but all of these things in terms of, the disbelief, the disillusionment of where crypto's at. I think last cycle it was maybe when was it exactly? It was like, I think you'd say January of 23 when we were coming out of the hole for Bitcoin a little bit. We were like just crossing 20K and Rolling Stone came out with something and on the cover, it was like, the NFT craze is dead and Bitcoin will never come back, recover from it basically, or something like that. I was like, oh, we only get like one or two of those exact like magazine cover type of sentiment signals. So that was a huge buy opportunity. And we're already seeing some of the blood in the streets, as Warren Buffett would say, right? Buy when there's blood in the streets. And so the way we're doing it, and Miguel could probably explain more too, is just we have the 4-year cycle low is expected in about October of this year. If you were to go, there's two ways to calculate it. I'll explain the details if somebody asks later, but basically there's one calculation that would be the 6th of October, and then the other one would be the 22nd. So within that band is where if it's exactly on point from what it's been in the past, because it's a 3-year and 11-month low to low usually, then that's where we'll hit Bitcoin's low, maybe around $45,000 to $55,000. But, cycles on their lows have some leeway, and we would say the leeway to the early side would be about 3 to 4 months early. So that'd be late June, early July, which we did hit a low of 57K so far this year. And then the latest I would say would be about Thanksgiving and right after midterms pretty much. So that's the band we're looking at. And so when we decided to come out with the Q3 crypto mindset course, we said, well, why don't we help everybody on YouTube for free in July, get everybody kind of going, with, okay, here are the multiple possibilities. Here's how we plan them. Then jump into the webinars in August, support everybody through September and the majority of October in basically not only just Q3, but into the beginning of Q4, because then we would have, I would say, an 80 to 90% chance of catching the 4-year cycle bottom. And then there's another scenario. I don't know if you want to talk about, add anything to that, or if there's the other scenario is the low is already in at the end of June, beginning of July, and the banks are coming in. But I don't know if you want to.
Well, I just wanted to ask real quick, because Citi just cut its 12-month Bitcoin target from 112,000 to 82,000. Do you trust institutional forecasts like that, or is that just bullshit?
Zero. I wish my YouTube was up right now, because I could direct you to August of 2019. I was doing an Elliott. I know these dates like the back of my goddamn head.
I know, right?
Well, it's funny that you say that, though, because I mean, like, you keep talking about 4-year cycles, and how a lot of people are like, oh crap, it's the end of everything. It literally happens like this every 4 years. It's like every 2 years, everyone's riding high. Every 2 years, it's all over. Yep. But it just keeps getting higher and higher.
I can tell you exactly why.
Yeah,
it's a red pill philosophy, because people invest like women.
Okay, go on.
So a woman waits to the finish line to fuck the winner.
Mm-hmm.
Exactly. So when crypto's hot, everyone's on the cock carousel for crypto, basically. And
Bitcoin, you'd never leave me.
You never leave me. Bitcoin's going to $1 million tomorrow, right? And then, bam. You get wrecked. And that's kind of how a lot of people are, is that so in our industry, we always make this joke, but like when crypto's in the gutter right now, like it is, we're like an adjustable 3 right now. Look right now, right? Okay. But we're like one of the rare adjustables that can adjust up to 10
or 11. Right? Sometimes
or 11. Even 11.
I'll go that far.
Yeah, we'll go that far. It's that crazy. So when crypto's really hot, like we're doing interviews with 1 million subscriber channels. People want to know what's going on. And when it's in the gutter and stuff like that, we're knocking on people's dudes. We get to buy now, because this is the easiest profit you can make right now, because it's really cheap. Sure, the price could go down an extra 20%, but it doesn't matter, because in a year you'll be up at least double your money. And on the safest assets, we're talking about Bitcoin, Ethereum, Solana. We're not talking about really dangerous speculative coins. We're talking about solid blue chip coins that are going to be here for at least the next 4 years, where then you can, exit out and take a really good profit on what you invested.
That's a really good point, because what is it, like the highs were in like over 100 in December or something like that. At the beginning of the year, when everything went crashing down to like 60K, it's like, for me, because I've been doing this for a while, I was like, oh, here it is. It is. Now everything's on sale. Now we can buy as much as we want. This is amazing. And yeah, in 2 years, about 2 years, give or take, it's going to be even higher than it was at the end of 2026.
Absolutely. And I think one of the things that's interesting about this cycle, though, there's always a new wrinkle, right? The industry is never going to not evolve. So it's always going to be something new. And the new wrinkle is Wall Street came in publicly this last cycle with its spot Bitcoin ETF. BlackRock helped to pump the price. To some extent, I think Bitcoin actually might have done better without Wall Street. It might not have been as fast in some portions of the run, but basically Wall Street acted as an exit liquidity vehicle for your crypto OGs, the guys who had held Bitcoin long enough to have over $1 billion of Bitcoin. There was one guy who bought, I think, a percentage of the New York Mets after he sold $1 billion worth of Bitcoin through Galaxy Digital last summer. So I guess good for that guy, because he held like a fucking champ for years, right? So he definitely deserves that. But at the same time, the way it used to work in the past in crypto is we'd have a way over speculative top because you would have the whales exiting into other cryptos, essentially to be able to get out of Bitcoin and then get into Ethereum, let Ethereum rise, make more money, get out of that into some other altcoin like Dogecoin, let that rise, get out of that, and you do that enough times. You don't need to get out of every single position. You can get enough money out that way. And that helps to pump the market. We didn't have almost any of that this last cycle. And so you only had Wall Street to sell down. And part of the reason why Bitcoin's struggling to break below 60K, which right now it should be at like 55K right now, actually, but it's at, I think, 66,000 because there's rumor that the White House has basically placated the Democrats a little bit with ethics for the Trump meme coin, so that politicians can't basically make and create meme coins. I think that's reasonable. I don't think that's too crazy. And if as long as the White House can accept that, then there's a few Democrats will vote in the Clarity Act. But Wall Street already sold as much as they really wanted to sell, there's going to be some people over the next few months that are continuing to sell. But the interesting thing right now is you have the infrastructure for 24/7 365 Wall Street globally being created being turned on this month. So you have Chainlink, you have Canton Network, you have Ethereum, and a few others that the DTCC, which is the infrastructure group that builds underneath the rails underneath the NASDAQ, the New York Stock Exchange, the Texas Stock Exchange, which just opened this month. They base in the CME, they make the infrastructure, like everything runs through them essentially. And they're building 24/7 365 blockchain on these blockchains. And they're allowing this month, JP Morgan, Goldman Sachs, and BlackRock, plus 47 other companies to use it, to test it. And then from October, they're turning it on for all of Wall Street. In Q1 of 27, they're going to be adding Stellar Lumens XLM for some privacy layers within there, and then they'll be fully functional. Right now, Vanguard is also hiring for its head of digital assets, which usually, that process for somebody that level would take 3 to 6 months, maybe 9 months max. But by this time next year, Vanguard's going to start opening up products and start buying in addition to BlackRock. And if they buy anywhere near, because I think Morgan Stanley has as well, but they're not even close. They can't even put a flame to BlackRock. But Vanguard, if they start buying in chunks that Vanguard did last cycle, then you have every other person or entity on Wall Street that has a brain in finance is going to be like, okay, now it's time. If you're not in Bitcoin at this point, from the Wall Street perspective, you will be a laggard.
Yeah.
Right. You'll be an old man that's just yelling at the clouds. Right. That's basically what Wall Street people, I would say there's not going to be that many firms. I mean, Charles Schwab, they're known as kind of like an old institution. Their crypto page has gotten the most hits on their website ever, and they don't even have any products live yet. Like they're going to be coming out with those too. So just the chase for more Bitcoin this cycle. And then the small firms are going to do the same thing that we did back in the day, which, because we came in 2016, 17, and we were like, well, Bitcoin's kind of high. Like, what else can I buy? Oh, this Ethereum thing's cheap, so I'm going to get some more of that. So that's actually my first coin that I bought. And the banks are going to be doing the same thing. They're going to be like, well, Bitcoin's kind of, they're going to try to get that, but then it's like, it's real estate, digital real estate that's already taken. So, okay, let's get some of this Ethereum or this Solana thing. And then there's all these different ETFs that are going on. And as soon as that race starts in the next 1 year, you're not going to stop until 2029. And I think the cherry on top in 2029 will be the EU coming out with a central bank digital currency. And that's going to be the very negative side of this. And then the very positive side of this will be that the United States has already put into law that it shall not create a central bank digital currency until 2030, which is good. But we need to make that, I think, like an amendment to the Constitution or something, because it's that dangerous to have for our country. I
mean, and also this is more of a pipe dream of mine, but I would also like a permanent, maybe, like, I understand, like, sometimes when a bank prints money out of basically need. And so, and what I mean by that, or demand, is that, like, the only entity in the United States that can print money out of thin air is the Federal Reserve, right? They could just choose to print money. Cool. A bank can print money, but there needs to be a reason for, like, a business loan or a mortgage. It's something like that, or collateral loan. Like, they can't just they need, even if the demand's fake, there needs to be that fake demand there for them to be able to print money. But
that's the fractional reserve
system that we have currently.
Yeah,
absolutely. And so I understand, like, you can't have a physical back note for all that. I understand that, right? And most people leave most of their money in the bank, or it's in an investment, so it's never just in cash. But that's why, like, banks can get away with, like, 10, and most banks don't even have 10% of the money in physical cash at their branches. But I would like to put into law that at least 5-10% of the circulating amount of capital that exists in the system, there needs to be physical notes. We need to, like, have physical cash always be accepted. I think that basically why we're so scared of what's happening in Europe. I mean, Europe's already,
they're cooked for a lot of different reasons.
They're cooked for a lot of different reasons.
This
right?
doesn't help.
What's going on in Europe?
Well, they're coming out with their central bank digital currency, which essentially just means, because we have stable coins now, like USDT and USDC, which are all stable to $1. This will be stable to €1, but the difference will be you can basically you can turn that into like an authoritarian state type of tool in the sense that you can track every transaction. And if they integrate all of their citizens' finance with that heavily, let's say over the decade after they introduce it, let's say in 2039, right, somebody's driving their electric vehicle, they're over on their carbon credits and they didn't re-up. And so the government says, okay, we're going to disable your wallet and your car and, kick you out of your home and whatever else they're going to want to do.
It's like the danger of a cashless society. Is that what you're talking about, Miguel?
Exactly.
Exactly.
So basically it's the start of global taxation where you can't escape it. And they're basically like the really draconian level of it is like kind of what's in China, where they have like the point system there where like, hey, if we don't like you, we can just shut you off. And basically your debit card, your credit cards don't work. You lost access to your bank account and you're kind of shunned.
No one will hire you.
No one will hire you. You're basically like prostitution / that kind of work. And or not even that, for some people.
Cans.
Yeah, aluminum cans. If they even, but it might be the whole system might be so digitized that like you can't even turn in your cans to the can system.
Yeah, it's kind of like a mix between Minority Report, Terminator, and I'm thinking Blade Runner or something like that.
It's so wild too, right? Because Bitcoin came out of the 2008 market crash, right? It was like an answer like to the big banks, like, hey, we need to be able to control our own money. We can't leave it up to the system. And when I first discovered Bitcoin, like I didn't even look at it because I was an idiot, right? Like, but I didn't even look at it like it was this investment medium. I was really big into hacking, network security and stuff like that. And I was like, I want to be able to buy things online anonymously with like cash. And so that's how I discovered it, by finding Bitcoin. Because at that time, the government still couldn't figure out how to track wallets and stuff. They figured out how to track Bitcoin wallets, by the way. So if you need something else like is it Monero? What's one that's more secret?
Zcash is the hot one right now. But
Zcash is a hot one.
Zcash
has its own issues. Monero has always been pretty solid.
Tried and true, it works. That one.
Yeah. But so that's how I looked at it. So to me, it blows my mind that big institutions are now getting involved with it. They're coming out with ETF products and stuff like that. Governments now want to get their mitts involved with it stuff too. Like, do you guys look at it like this is, I mean, you're already saying if we go full cashless society, that is a big problem. But I mean, it almost sounds like the big banks, the people that run everything are really trying to muscle their way into this.
They definitely are. Like we're in the middle of kind of like brackish water. We got clean, pristine, saltless water mixing in with seawater, and it's this mesh, but kind of in a way like the people who started this whole crypto system have like this
utopian vision.
Yeah, utopian vision, but it's kind of deranged as well, because it's never going to be exactly what they wanted.
It's impossible.
It's impossible, right? Because we're fusing two things together, but in a way we're kind of cleaning it up a little bit. So things are going in a better direction, but let's not forget it's humans who run all this stuff in the same time as well. So like the reason we want to onboard so many people into crypto, let's just say we are heading a little more dystopian than we'd like. I'm more of an optimist. I feel like we're heading in a better direction, but it's still not going to be perfect.
Yeah, America so far is in the much better direction since Gary Gensler has left the SEC, hand over fist.
Right. So this is why we're pushing people towards having and learning how to use crypto, because if you have Bitcoin or Ethereum, they can't mess with your money, because these stable coin systems and these central bank digital currencies are running on top of Ethereum, and basically it is in everyone's interest for Ethereum to stay decentralized, because if someone can mess with the system, someone can mess with their money, and now they're in some trouble. Yeah. So there's kind of like some war games here going on and stuff, and some kind of like mind games go here. So it's this whole thing where it's in everyone's best interest. Let this thing run how it wants to. So if you have access to Bitcoin or Ethereum, essentially you can't get muscled out of the economic system on the planet.
Yeah, it'd be very similar to the growth of the internet. So we just call this the Internet of Money, which is the technology of blockchain. And so blockchain can be used for other things. It could be used for court records. It could be used for housing records. It could be used for voting, to get rid of voter fraud, which is why they would never will use that for that purpose in any country, pretty much.
They got to be able to control the vote somehow, right?
Every single country, right? Yeah. And so there's a lot of, it's a tool, right? It's like gunpowder. It's like There's a lot of great things you could do with it. There's a lot of bad things you could do with it too. So it's just a matter of whose hands is it in, and how educated as a society are we about it, which is kind of what we feel our job is to, hey, here's, the printing press, but for money, right? Here's something that, we've had money for the people that we've never had in human history, right? Humans have never been able to print their own money. That's, they get killed or they get it taken from them, or lots of different things. So it is an amazing technology, but we have to be educating everybody about it. For one, the usefulness of getting into it early is, massive. There's a huge upside to that. That can make everybody's lives easier in terms of, their investments and stuff. But then also in terms of self-sovereignty, like Miguel said, if we do go towards a certain type of digitized society, you need to know kind of the lay of the land a little bit to know, okay, Bitcoin is pseudo-anonymous. It's not fully anonymous. What do you need to do as a best practice in order to stay as anonymous as possible? And some people just don't care, just as they don't care if Facebook's listening to all their conversations through their iPhone. And then some people care immensely, which is, the people we try to encourage basically more, because a lot of people in Europe, I've been saying this on my stream for over a year now, that in 2029 we're going to get it, and now there's public reports about it. And a lot of Europeans on the comments, not all of them, but like just a couple, will say, like, try to be in denial about it and stuff like that. No, Europe's not going that direction. We're just cleaning it up. Crypto needs to be regulated. Like, yeah, it's partially true, but like your government's trying to get this passed through under your nose without any public opinion about it, which is, I'm from Minnesota originally. There's a guy called Tom Emmer, who I forget what position he holds. I think it's like the House chair or something like that. I can't remember exactly off the top of my head, but he's the only politician in the United States who could actually, as far as I think, can actually speak about crypto intelligently. And one of the things he said, and he's trying to push this in through the Trump administration and stuff, is like, this is, dangerous. A central bank digital currency is one of the most dangerous things that could happen to the United States. So we need to nip this in the bud right now. And he's very eloquent about speaking about it, which it means, he's already educated himself about it through his aides. Most politicians, what they do is they have their aides tell them the sound bites, but they don't actually know what the heck they're talking about when it's coming out of their mouths, because you can see the mistakes that they make. But we try to educate everybody in the course over the 2.5-week boot camp that we have. So that way, by the end of the 2.5 weeks, they're resident expert in their local area. And we even had one guy who came up to us at a Pulse Chain conference a couple of years ago from Arkansas, and he was like, hey man, like, really appreciate you guys doing the course and everything. I took a few of them, and now I'm on the board for the Blockchain Council of Arkansas, right? Making like, what do you call it, standards among that state in particular for how they're interacting with blockchain. I'm like, that's fucking awesome, man. So there's a ton of open green space opportunity for everybody, and there's a lot of good things that can happen from it. It's just a matter of, people picking up what fits for them.
No, speaking of guys that have gone through your course and being very knowledgeable about this stuff, I have at least 2 guys in my Wolfpack men's group that have been through your guys' programs. I think they're still in your guys' Telegram communities and stuff like that. Because I'm one of those guys that I invest in Bitcoin, but I dollar cost average and I HODL and I don't look at it. I just whatever it's going to be in 10 years is probably when I'm going to start pulling out of it or whatever. But periodically they'll pop in and be like, okay, this is what's happening in Bitcoin right now, guys. And they are very knowledgeable just because of everything that you guys have taught. That's why I was telling the guys today, I was like, man, if you guys, some of you guys have been talking about wanting to get more into crypto, you guys want to learn more about it. This is how you learn, is from these guys that have been teaching it for however long you guys have been doing this. Since the beginning of time, or since
effectively no, but we always make a joke that 1 year in crypto is like 10 years in the stock market. So we're 100 years in this.
That's why I have all this white in my beard. I'm only 25 years old, but I've been in crypto for a while.
I've been the mascot of the old guy. But yeah, it's like you have the right strategy. So like, we obviously, like, we've helped everyone from, Fresh and Fit and Rolo, Justin Waller, everyone that's in the red pill, essentially, we've helped them
technically. Tristan had signed up under his email.
Oh yeah, Tristan Tate. Yeah.
The first course that we publicly advertised was in December of 2020. And I was watching all the Stripe transactions and PayPal and stuff. I saw like Tristan Tate. I'm like, I think I I see in the course, and I look at his credit card transaction. I'm like, oh, it's actually him. And then during one of the first preliminary discussions with like 25 people, just like an open conversation, one of the guys was like, oh yeah, I live in Vegas. And I was in Tokyo at the time, but he's like, oh yeah, I live in Vegas. I hang out with the Tays and stuff like that. And I was like, he was telling me enough stories. I was like, oh, these guys are coming in and seeing what this is about, because they hadn't blown up in the red pill yet, but they were very, very well known at the time, of course.
Yeah.
It was like at the beginning of their ascension. And so I was like, oh, and then there's a few coins that, we recommend that might be a little bit unique to our channels. And they started recommending. I'm like, okay, well, at least they're getting the good information,
Yeah. Well, Tristan and what's his name there? His brother, Andrew. They both have done very well in crypto.
Very well.
In fact, God, a couple of it was 2 years ago, we were doing a big fundraiser for RP Thor because of his brain cancer and stuff like that before he passed away. And Tristan, he donated something like $10,000 of Bitcoin to Thor's thing. I mean, very generous guy. I mean, they get a lot of bad publicity, but they're actually really good men.
No, absolutely. I mean, I know of at least like 2 other cases where they've donated money to people here in the red pill, especially for things like that, like for deaths or something, or with sickness. No, they actually are really great guys. It's just they get a lot. I mean, they just get a lot of bad rep and stuff because like certain people don't like them. I mean, it's just kind of, I've always personally thought it was like, I think they went a little too hard in the paint in Romania, personally, right? For me, but I totally get, like, I have so many buddies of mine that just, the classic move is like, you start making money in the UK and then you move to Dubai. Like, smart, because like, like the taxes are crazy and it's just getting really dangerous out there. I totally understand that. I lived in the communist state of California and no longer, so like I get having to move, but
I too am a refugee from the communist Republic of California. Yeah.
And now currently voting to make this state terrible.
Oh, they've already taken over this state. I live in California light now. I didn't run anywhere. I just ran into enemy territory. But they don't bother me so much on the Western Slope, so it's pretty good. None of the liberals want to live out here in this desert wasteland. So that's lucky for me.
Yeah. I mean, they make really, like, they've made some really good, like the Tates have made really good, like, crypto investments. But like the problem is like what gets attention is trading. And like, I mean, I know it's not Tate or them actually trading their own thing. They got guys in the background, but they've lost a lot of money trading. And like a lot because once you put an address out there, like, hey, this is what they're doing, people are able to track the wallet, and they've lost a lot of money as well from the trading. So that's usually what we try to push our guys away from, the trading platforms, because it's a rigged casino.
Specifically the leverage trading, Bybit and those types of things. The reason is because you're borrowing to make a bigger gain on a smaller amount of capital, which if you're not correct, then they just take the capital, and at least you don't owe them anything more than that, but it still sucks, right? So we talk about swing trading over 60-day cycles, which that's you don't need to do day trading to be successful in crypto. In fact, the less you do of that, the more successful you will be overall, if you have the wider lens. So like in the course, the last Q2, what we did was we talked about, we have this indicator called the Cultivate Crypto Algo, which just gives some buy and sell signals on different time frames. And we chose the ones that we thought everybody could follow pretty well, from about April 6th through about the first or second week of May. And we got everybody in on some short-term stuff when Bitcoin was under 68K, and then we sold everybody out of the short-term stuff when Bitcoin was between 78 to 82. So on Bitcoin, not a huge spread, but if you get a 10-15% increase on Bitcoin, you'll get 30 to 50 to 100% increases on different altcoins. So our guys did pretty well. And there was this one guy recently in one of the chats that we have some of these unrecorded chats where we just talk to the group and see whoever is available at that moment. And this one guy was like, I've been with you guys for about a year and a half now, since the beginning of 2025. I've only made money. Are we supposed to lose money in a bear market?
That's a good problem to have. Yeah, it's a good problem to have.
Yeah, exactly. And so like everybody just, was kind of laughing, but everybody's just like, man, that's awesome. Right. So, it's about, we give it's like, your personal trainer. They'll tell you, okay, do this, do that. This is leg day, this is arm day, whatever. And do it, and then eat properly. Don't do anything stupid. Right. And then some people can maintain that, some people can't, right? And that's the same thing with crypto, but we give everybody a lot of stories of the good, bad, the ugly of what's happened, so that way they can learn from others' mistakes. Some people need to go through some stuff in order to learn, but not everybody has to if they listen.
Well, if you let me ask you this, because there's lots of different ways to make money with this stuff, right? Like I said, I'm a hodler, so that's like I'm playing the long game. Yeah. But if guys did want to get more into the trading aspect of it to try to make money, if you look at it from look at the stock market, right? If stocks are going down, you can make money shorting stocks, right?
Correct.
Can you do the same thing with crypto?
Yes, but then it does require leverage. So you have to put up collateral for those types of exchanges, because it's I would say it's not, you're not shorting spot. Basically, just short spot, you just sell it, right, and then let it drop and buy back again. So if you do that with spot, that's perfectly fine. Just sell one Bitcoin. But if you're leverage trading it, you're like, I have one Bitcoin, then I'm borrowing one more Bitcoin on top of that, and then if it starts going up,
Can you only do that with, because you said spot, that's ETFs, right? Can you do it with actual crypto?
Physical coins.
Spot just means the actual Bitcoin itself.
Yeah.
Okay.
The reason why they say the spot ETF is because there's ETFs where they just put paper money in there and say it's the same value as Bitcoin. Then there's ones that they actually buy real Bitcoin and back it up with that. So when you back it up with spot Bitcoin, you're backing it up with the actual Bitcoin. So if you're trading spot, you're actually trading the real Bitcoin. You're not borrowing anything. But if you trade leverage, you're leveraging that one real Bitcoin for 2 or 3 extra fake Bitcoin. And if if it doesn't go your direction, they don't pay you those extra Bitcoin. They take yours.
Yeah, and it's and believe it or not, shorting is actually more dangerous than longing, just because you basically the coin. In order for you to really make a lot of money, right? You have on shorting and stuff. It can only, the coin can only go to zero, right? So there's kind of the trough there is not that large, versus if a coin can be at $1, it can go to $1,000. That does happen in crypto, where you have nowadays it's probably it was a penny and it went to $10 is kind of the math there. But because of that, you can really make multiples on a crazy run on a coin. But during crashes, what ends up happening is you have a coin crash 40% and then pump 30 and pump back up to 90% of its value before going back down. So you could be 100% right. You're this coin is literally going to go down 90%, and you're right. But in the meantime, in the 2 months or month it takes for it to crash at 90%, you'll get liquidated because it could spike back up and stuff. So it's this whole thing where you're shorting, you have to periodically close the position down in profit, then kind of get back in position. Some people they're short 5, 10x, and 10% move in the wrong direction, they take your money.
Yep.
Yeah.
And you're in the fucked up thing is you're completely right. Your synopsis was yo, this thing's going to go 90% down. But they'll take your money and then make you right.
Right, which is why I recommend, if you're gonna I wish we had this button right now.
So it still goes back to, if you're the average dude who doesn't want to spend 15 hours a day keeping an eye on charts and shit like that, just buy and hold.
Buy and hold the right. Yeah, you still have to do a little work, some of the work. Obviously, Bitcoin, Ethereum, you hold those two, you're fine. You really like someone like Myron Gaines, right? The portfolio we have him in is Bitcoin, Ethereum, and then some Solana, right? So, and Solana's kind of graduated into that, at least for this cycle. We may end up having to tell Myron, in I guess it technically would be 2031, that Solana's probably not it anymore. But we'll have to cross that bridge when we get there. But for this cycle, Solana is it's good. It's going to do really well.
Solana's been one of your guys' favorite altcoins for a little while now.
Yeah, we don't like the tech behind it, but we love the money movement behind it. So it's one of those things.
Yeah, we don't hate money. We don't hate money,
right? And so if you look at it compared to Bitcoin, Ethereum, it's extremely centralized. There's a ton of insider trading. I mean, even more so than the others. And there's a lot of, I guess, negative aspects that come along with those things. But when you look at the price movement, I mean, last cycle, right, went from $10 to 300. That's nice.
Not bad.
We won't say, we're not going to take that. It's kind of the same approach you take to a meme coin. Okay, I know this meme coin is not the same as Bitcoin, Ethereum. I know Trump coin, is just, a promise on a blockchain. It's not Bitcoin. But I'll still buy it if I think I can make money on it. Trump coin in particular, because of the ethics thing that's coming through with the Clarity Act, probably is not going to do too well anymore. But other stuff, other meme coins, they're hot. They come up and they go away. And so that's why he said, Solana, has the most existential threat to it compared to Bitcoin and Ethereum, because Bitcoin and Ethereum are already entrenched based on their tech. Bitcoin is the store of value for crypto, like gold, and then or digital gold, and then Ethereum is essentially your Apple App Store. It's where everything is built upon, and it's the core foundation for all smart contracts. And when Wall Street comes in with their tokenization of stocks, which they'll call real world assets, that 60% of that volume is going to be on Ethereum almost automatically. So Ethereum's not going away anytime soon. And so then it comes down to, okay, who's third? And then there's, 20 different coins trying to get to that level. And Solana's got the crown so far, but the crown is heavy. So we'll see. But Robinhood doesn't have a coin, but they came out with a chain on top of Ethereum recently. And if Robinhood came out with a coin, and then if Coinbase for their DeFi section ever came out with a coin, which we think they will, then Solana is going to start getting a lot more competition.
Yeah. So like last cycle, so Solana's pretty much existed since the 2021 cycle. So like, I don't know if you ever explained this, but basically in crypto, we explain a cycle is usually 4 years, and we usually call it the year the price was the highest. So it's like the 2017 cycle. That was, that's the time Bitcoin went from like basically $100 to 20 grand, then crashed. The 21 cycle, it went from $3,300, $3,100 to 69 grand, and then it crashed. Then at the end of 2022, it crashed down to 15,500, 15,800, and then pumped to 126,000. And that was in 2025. So like
it crashed down to like 60. Do you guys see how like when it crashes down, it's still crashing up? And I think that's the big takeaway for guys that are new to this, that are like, they hear the stuff like, God, you remember in 2020, it was all about the Tulip Mania thing. They were always trying to compare it all to the Tulip Mania. It's not the same thing at all. It's not at all like a Ponzi scheme or anything like that. It's, can you guys talk about why Bitcoin specifically is worth what it's worth because of the scarcity built in and like all the mathematics that prevent it from being debased and all that kind of stuff?
Yeah, so we'll probably both have there's a variety of points on that. So if you look at like copy paste on computer, right? If I type in something on my computer, I can copy that, I can paste it somewhere else. There's two versions of the same thing. Anything on digital is basically usually copyable, right? Whereas with Bitcoin, they made it so that it's not copyable. It's called the Byzantine generals problem, which Nick Szabo solved, I think back in like 2003, essentially. But he made it so that with the encryption that Bitcoin has, they eventually adopted that for Bitcoin. He didn't make it for Bitcoin, allegedly. He could have been a group of people that helped to make it, but nobody really knows, right? But when the people who made Bitcoin adopted that, they were like, okay, we're going to use some of these other things from these other cryptographers that they made, but this is the first time any encryption has been made that it basically makes something not copyable. And so when you have your 21 million Bitcoin, you only have your 21 million Bitcoin, and everybody who runs a miner on the network is going to say when the Bitcoin comes into their miner and they got to check the transactions, okay, these are real Bitcoin, okay, good, and then keep it moving. But when they get like Bitcoin Cash, which Roger Ver said was the real Bitcoin, right? But why is it not recognized as printed Bitcoin? Because it's hard forked Bitcoin, right? The reason why it's not recognized is because it's a separate chain of the network. So you go all the way back until you can go through the entire transaction history. It's kind of like a connection of stone tablets. If you look back in the day, the ledgers that people used to make, it's like that, or like a collection of Excel sheets, basically, that are locked into the blockchain. If you go all the way back, what the miners do is they check all the way back to 2009, the whole history of Bitcoin, always to see, okay, where did that come from? And what they'll see is there was a hard fork here, So that's not the network we recognize as Bitcoin. That's a different network. And so then they recognize it as a different asset. So people have tried to say, oh, if you make a hard fork, that's going to dilute Bitcoin supply. No, it creates something totally different that nobody wants. And so people just ignore it. It becomes a beanie baby on that side, but Bitcoin stays Bitcoin. So that's one way to look at it. And so the other, I guess the second thing in addition to that is, since there's only 21 million, the more people in the world that want it, the higher the price is going to go, simply because it's scarce. And there's I think on average, maybe about 60 or 80 million millionaires in the world. So if every millionaire wanted one Bitcoin, they couldn't have one. So that would in itself could shoot up the price. And so it's just a supply demand issue at that point.
Right.
And as more, the supply basically stays the same pretty much from now, because 19 of the 21 million that will ever exist are already there. And
that also solves the inflation problem too, right? Because they can't keep printing more Bitcoin because there's a finite amount.
And so
because everyone has to follow the
up.
rules. Yeah. And you can never get enough control of the network in order to change the rules. So there's this consistent fight, because everyone's fighting for that economic value of coins that are coming out every 10 minutes on BTC. So it's sort of like so they solved the trilemma. And like one is like, so what's a trilemma, Miguel? Like, what is that? It's like, there's a lot of trilemmas in the world. Like one that everyone understands, it's kind of funny. It's the college trilemma. Like you have I usually have a meme here to play and stuff, but usually it's a triangle, right? And there's 3 points in the triangle. One is good sleep, good grades, social life. Pick two.
Right.
You can't have
three.
Yeah.
You can't have all three.
Can't have all three. Yeah.
Right. Well, we figured out a way to have all three with BTC, basically. Right. So it's like scarcity. So you have the scarcity part has always been the hard one, like Charlie was explaining here, which was like basically like you could have speed, reliability, it's money, it has value, but someone will figure a way to print more. And we basically figured out a way. It can't be printed. It has this locked supply. We have these arranged rules that we have decided that it's going to come. It started with 0, and then every 10 minutes, 50 coins were created. 50, 50, 50, 50, 50, and every 4 years it got cut in half. And now it's only 25 every 10 minutes, and then 12.5, then 6.2, then to the point now where like essentially almost no BTC is really coming out. We're like, there's only 1 million Bitcoin left to have to be mined, and we're about to have another halvening in 2028. Which is even going to have even less supply. So like that last like 100,000 BTC that are going to be mined is going to take like 100 years to come out.
And a lot of people are like, well, wasn't Bitcoin created to kill the dollar? Why is the United States government wanted to get in on it and stuff like that, right? It's like, no, it's just created in the mirror image or the antithesis to the dollar, right? The dollar's not scarce, so the dollar keeps getting printed, and so the value keeps getting inflated away. That's the exact opposite. Creation doesn't mean because Bitcoin was created in the opposite image that it was the devil to, the Fed's, angel or whatever you want to call it. Right. But actually, the US government has now, and Wall Street has found uses for Bitcoin. I mean, for BlackRock, the use is they've had the most profitable ETF in their history, simply by, jumping onto Bitcoin there. The US government and even states like New Hampshire, Texas, Florida, Arizona, and maybe a couple others are starting to make Bitcoin strategic reserves. And so what they're doing is it's like a Fort Knox for the state or for the country. Right now, the only Bitcoin that the U.S. has been confiscated Bitcoin. They just have agreed that they're not going to sell any of it. They're going to hold it. And I think they're maybe one of the top 3 governments right now with the amount of Bitcoin that they actually hold. Germany sold all of theirs in 2024, which is at $55,000. They just said, hey, we had confiscated all this Bitcoin. We don't want to promote it or anything, so we're going to sell it all. And price went up right after, of course.
That just seems ignorant as hell, Like, I mean, they seized it from someone and they're like, well, we don't want it. We'll get rid of it. It's like...
because they view it as a threat, but the way it's a threat to the financial system is the blockchain and stable. Right now, Bitcoin's not a medium of exchange, but the thing that is the stable coins like Tether and USDC. And the reason why that's a threat, Stanley Druckenmiller is one of the better investors on Wall Street. He had said in 15 years, everybody's going to be using stable coins just because they're 100 times more efficient. You can have them confirmed over nation or across, borders and everything. Like basically it does everything 10 times faster, 100 times more efficient than anything a bank does. And on top of it, it's like 1,000 times cheaper than anything the banks will ever charge anyway. So he's just like, yeah, it makes no sense why we would use anything else for especially international transactions over the next 15 years and then therefore beyond. Of course, that scares a lot, that has to make Wall Street more competitive. And all of a sudden, Coinbase says, hey, can we offer yield for these things? If you hold your stable coins here, we'll give you 7%. Well, we're not technically a bank, but we want powers that the banks have because we have different tools with liquidity systems and DeFi that we can do that with. And then the banks are like, yeah, not so fast. And I think Jamie Dimon even called Brian Armstrong, the CEO of Coinbase, an asshole, publicly. He was like, you're a fucking asshole and you don't know what the fuck you're talking about, is what his quotes was, I think earlier this year. And the reason why they get that kind of emotion out of Wall Street is because, hey, now all of a sudden you guys can't just sit on your laurels. You guys have to compete, and they don't like that. And so Robinhood going full fintech and going, all into tokenization and crypto scares the bejesus out of, I think, a lot of banks.
So you have kind of like millennial fintech versus boomer like financial institutions, and they're having to, it's adapt or die now. And like JP Morgan's not dumb. They're adapting now, but they're not happy about it. Right. But they're really jumping in hardcore. I mean, look at this. So BlackRock had the first basically Bitcoin ETF, which is like, you buy $1 of Bitcoin and they have to buy, you buy $1 of ETF, they have to buy $1 of Bitcoin to back it, right? So it's 1 for 1. And it is their most profitable ETF they have ever launched as a company. And this is a company that has trillions of dollars of assets under management. And this ETF, I mean, how much do you know how much they have in that ETF right now?
About 51 billion.
So 51 billion under management in that ETF.
I think the volume has been upwards of 120 billion plus.
Right.
So there's been a lot of sloshing, but the stuff that's left in there right now is 51 billion.
So 51, let's just call it 50 billion. So $50 billion of assets in there. They make more money on that ETF than they do on any of the other ETFs. Even if they had an ETF with $1 trillion in it, they make more money on that ETF. That's how profitable it is.
What would be the benefit? I think I've probably asked you guys this before. I just don't remember. But what would be the benefit of investing in a crypto ETF instead of just buying crypto?
Well, there's financial. So basically, one, laziness is one. So it's like, if like you may be
shut up and take my money. No.
Your 401k already. Yeah,
it's already in there, and so there's tax advantages as well as. Even if like you already had an account in, like, let's just say I had an account on BlackRock already, right? And I'm just managing my own accounts there. I can borrow on my ETF because it's BlackRock and it's a BlackRock account. I could borrow on my Bitcoin account, and basically it's tax. So if you borrow an account, loaned income is not taxable. So there is financial reasons, money reasons, custody as well. So
and the one way to look at it compared to the old world when it comes to custody, it's easier to custody Bitcoin than gold, but you still have to custody it, right? You still have to know what a private key is, know what the wallet is, all that stuff. A lot of the people on Wall Street just don't want to be fucked with even that. So they, how we have like paper gold and actual physical gold that gets delivered, same thing, just the banks would rather trade around fake paper money that they, say, hey, this is back. Don't worry about it. Trust us.
So so a lot of it is so that you could use it in vehicles like 401ks. They'll give you an option to now have crypto as a part of your portfolio, borrowing against it. So you can have like a term life insurance, do the term life insurance thing and borrow money. Yeah.
If you hold Bitcoin yourself, you lose it, you're fucked. If the bank's holding it, you're not going to lose it because they have your deed to it essentially.
Right. And if eventually Vanguard's already announced they're going to have their own ETF. They're essentially the biggest like ETF provider on the planet. They essentially they took us from like mutual funds to ETFs basically. Right. So Vanguard's about to start it up. My kind of conspiracy theory I've been saying for at least since this bear market started is that they're going to mark the bottom. For sure. It's like either they make the bottom or they're going to basically
confirm it
basically. So like as soon as they're in, their clientele is going to buy. It doesn't mean 1% of all their money is going to go into it, but like now all their customers are allowed to be in it. There's going to be quite a lot of money that's going to jump in, and that's very likely going to like pop us off from the bottom there, and then that's it. Like we're out of the bear market. That for crypto literate people, we know that's the end of the bear market. But for the normie,
they're scared until it hits a new all-time high.
Correct. Yeah. So like
way too late.
Like a high tier normie might be like, once Bitcoin's at 100 grand, okay, I'm gonna start playing. The normie is going to be until we hit like $147,000 BTC.
It's real again.
I guess it's time to get back in. And then you have everyone else where like they don't even start thinking about Bitcoin until like 2028, 2029, when the prices are like maybe if we're lucky, maybe Bitcoin could hit like 200 grand or higher, right? And then they're like, I need to jump in. This is the fast money, and it's true. Like we get the most amount of interest in crypto in the last year, always, right? 21, 17, 25, 29. It's the same old story, but it's true. But when Bitcoin's that high, there's so much money sloshing around. You can make fast money a lot. It's very easy, like to jump into a coin, make 3, 4, 5x on your money, move year. Meme coins are going crazy. Like it's when the velocity of money in crypto is crazy, and there's so many games to play, so many coins to invest that we can and make fast money. But the problem is that your time to learn to make it is very short. So like when someone jumps in, they may only have 9 months, a year left.
Yeah.
And the game's over versus like us, we've had full 4 years to play.
Yeah.
So right now, because we're in the bear market right now, would be the ideal time if you want to learn this stuff and get in, would be to go in now, because right now prices are as low as they're going to be ever. Right. And so if you want to make big money, even if you just want to be like me and just buy and hold, like if you haven't done it, I mean, the best time to have bought this stuff was in 2008. The next best time is right now. And so buy right now, hold, and you'll make money. But if you want to get in and start learning it, where you have some runway to learn the ins and outs, so that when it does get back up to the high cycle, at the end of what are we looking at, 2027, 2028 or something? 2029. When you want to be prepared for that before you get there. You don't want to wait until then to start learning this shit now, right?
Exactly. And we have a way essentially where we have the bottom, and then you buy the dollar cost average into the portion before it. So that way, if we don't go as low as we think we will, you're still in the game. If we do go as low as we think we will, then you can buy that whole thing, right? And then you do want to buy, let's say 3 to 4 months before the bottom, and then 1 or 2 months after. If you buy during that 6-month window, which is pretty much where we're kind of angling the course here, then you have bought dollar cost average into the best opportunity possible. And that's for Bitcoin, Ethereum, and then any other coins in the market that you're like, okay, maybe I'll take a stab at this or that. But one thing we recommend is having over 50% of your portfolio in Bitcoin or Ethereum. So that way, let's say you buy this portion of the bottom with us during this bear market, you're a buy and hold person. You take a couple maybe risks here and there, but with money, that's like whatever. And then maybe they pan out, maybe they don't. But in a few years when Bitcoin's up, you're like, okay, I'll sell some to take profits. And then I'll buy back in at that next 4-year cycle low. I bought that low one, so I'll want to buy that again. So as long as you're not going to get the exact bottom, you're not going to sell the exact top, but as long as you're getting that meat of that 80% in the middle there, you like, especially if you came in the early part, you're going to win. But if you're like a chaser, like Miguel was saying, and you're FOMOing in and you don't know where you're at, and it's just like so many mistakes can be made. It's kind of like going into a football game knowing the game plan versus having no clue and they just put you in a position. You better be fucking good if they just throw you in.
Correct.
Yeah. So you mentioned at the beginning of the show around October there was a specific date going on there. Are we in the bottom now between now and October, or what was that October date again?
Yeah. So basically the window for the main low that everybody's looking for is in October, in that mid-October period. Okay. But there is a possibility that it comes earlier. There's a possibility that it comes later. I think the latest possibility is November, the end of November. And the earliest possibility was July 1st, where Bitcoin hit 57,000. So we could actually have the low in already because Wall Street's coming in so hard. And then the stuff we're buying now is basically accumulating post just after the lows. And so if we do then get a surprise, let's say in November, December of this year, and all of a sudden, boom, we pop Bitcoin back up to like 90K or something. If that happens and you're prepared and you've already gotten in, you're fine, right? And you can speculate on maybe some of the other stuff that hasn't moved yet. But if you're a person who's like, I'm going to wait for the exact bottom and like the lower,
you'll never know when the exact bottom is until a year after, and it's already fucking way too high. Then we go, oh shit, that's what it was. Fuck, I missed it. Yeah. It's like I prefer like just start buying now. Just buy now, even if we're we're in a downward turn still. It's eventually going to come back up, and you're going to make money. you're
Average it over the next 4 to 6 months.
Yeah.
Let's say you have $6,000 for 6 months. Okay, I got $1,000 to spend per month on. Let's say I'm just going to buy Bitcoin, Ethereum. Okay, that's $250 a week. All right, I'm going to use 150 of that for sure every single week. I'm going to buy $75 on, let's say, Tuesday and $75 on Saturday. That's what I do every single week. But I still have now about $100 a week that I can add to it. So like, if I'm paying attention, we do these things called the 60-day cycles. And if we're like, okay, we're at an area where a 60-day cycle low is occurring, it might not be the low of the market, but I'm going to take that extra 400 that I saved throughout the last 1 month and boom, put, a larger amount in that week because that's what we call dynamic DCA. You're getting the guarantee of that consistent DCA, but then you're holding a little bit of that to the side so that you can get bigger chunks in at the more discounted prices when you get them. And that takes a little bit more paying attention. I would say, 20 minutes, maybe every other day of just keeping an eye on the market and stuff like that. That you can dynamic DCA, you can do a straight DCA, which is just same over time. Don't think about it, just program it in. Those are the two ways that we recommend people do it. And so, if you just do that over the next 6 months, that's good. The larger amount of money that you're putting in, the more you want to be kind of nuanced about it. The less amount it is, you can be less nuanced about it and then focus more on making income, which is why we also include AI information-based webinars in the course, because my brother, he's a consultant AI or a CAIO, Chief AI Officer for a company that basically helps corporations integrate AI into their systems. He's helped Dairy Queen, among others, integrate that. And we have him come in and give his way that he essentially helps corporations and their employees learn how to use AI, make it productive. First of all, make it productive so you do less, I guess, menial work like email and stuff like that. But then we turn the subject to, okay, how can you use this to generate income? Maybe as a side hustle, maybe it's getting a promotion at work or whatever it is that you're trying to do. AI can definitely assist with that. So we want to get guys, who might not have as much, who are playing the game, to earn more over time, because once you start making money with crypto, you're like, I kind of want more of this,
Yeah. Who hates money? Why do you hate money, man? Like, sounds terrible.
Yeah.
Well, guys, we've been going at this for an hour. Did we hit everything that you guys wanted to talk about today?
Yeah, maybe. Did you send them the schedule? Or
I sent you the schedule on Telegram. I don't know if you want to just show that.
Yeah, that'd be good.
Yeah, let me bring it up here.
Let's
see. Oh yeah, let me.
Good way to wrap it up.
Okay, yeah. I'll let you talk through this here. Let me just bring it up.
Sure.
Here we go. There we go. Okay.
Not that photo.
Not the nudes. Oh shit.
Oh, that reminds me of Red Pill Thor. God damn it, bro. God damn it.
Yeah, that's true.
I missed Red Pill Thor so much, but man, dude, sometimes people are like, hey, Miguel, check this out, bro.
Like,
bro.
Well, it's side topic though, but did you hear that's what happened to his YouTube channel?
No.
Oh God, that poor guy, man. Like, well, I mean, near the end when the brain cancer was really taking over, he was having a hard time really just seeing things and knowing what things were. And he was very adamant about getting all of his videos that he ever made out there for the people so that they all had the information, all of his dominant masculine presence stuff. And he went to go upload what he thought was a video that he did, like a course or something, and he accidentally clicked one of his videos one of his private videos, if you know what I mean. Oh, and he uploaded it to YouTube, and they immediately banned his channel.
Oh,
yeah, and it was like, oh shit, like that's terrible. Just years of great red pill information gone because of an accident. Yeah, it's really unfortunate.
That's so unfortunate.
Yeah, no, he shared those willingly in a lot of webinars, and there were some fun times where I was like, "Hey, good job, man!" Like,
yeah. there were some he shared in my men's group a couple of times, and I was like, Thor, I'll take your word on that, man. Like, I don't need to.
Yeah, exactly.
I don't need to see that.
Honoring his memory right now.
Yes. Oh, he would get a kick out of all that. Yeah.
We love him. He's a great guy.
He's such a good guy. Yeah, rest in peace. But yeah, so we are starting. So the last day to get into the crypto mindset course is the 28th of this month. And then webinars start August 1st. We are going to start off. So these times, AM and PM times here, are on Eastern Standard Times. So we'll have classes at basically 10 a.m. in the morning and 10 p.m. at night. The first webinar is called the Quarter 3 Thesis, where we basically go over what happens over the next quarter, basically, right? Over the next 3 months, as well as we kind of go into what we believe is going to happen into 2027 and the overall cycle so far as we see it. The thesis always adjusts, especially when we're talking over the cycle, but we have a pretty firm game plan of what's going to have happen over basically the next 3 months, as well as towards the end of the year, basically. And then we go into Risk Management 101, which is the most important webinar that we have here on this entire list, which is basically how not to lose your money.
Defense.
Right. So I'll give you guys a secret. Half your money should be in Bitcoin, Ethereum. Who would have thought? And if the more busier you are, if you're a very, very busy individual and you have a very sporadic schedule, I highly recommend probably closer to 70-80% of your portfolio being Bitcoin, Ethereum. You can still, like, I still love having a little room there to speculate, 20%, 30%. If, like, for someone like you, you're really busy, yeah, I'd probably tell you like 70% Bitcoin, Ethereum, and then throw some haymakers on that 30%. But for people who have a lot more time, 50% is a really good amount there, and then you could still have tons of room here for speculation assets and stuff. And even if, let's just say, you chose wrong and everything was wrong, like you just every speculative thing you chose just went to zero, the Bitcoin and Ethereum you would still end up in profit, because Bitcoin and Ethereum would at least triple, quadruple, even 5x from these prices now, that you would cover the loss of everything you put on this side. That's kind of the beauty of it. So no matter what, you'd end up the bull run with still in profit. And from that point in time, you probably like readjust and probably go towards more of a heavier one, or kind of like learn like what were the mistakes in some of the coins I chose, right? But this is why the webinar right after is the top 50 coin list, where we go over the most important coins in the crypto market today. A good chunk of them are ready to buy. A good chunk aren't not ready, but you should know what they are. And that's kind of there. So like we end up going, the courses end up being taught in like a 2-day on, 2-day off system. So 2 days of classes, 2 days to kind of catch up and kind of get some rest, and kind of, people can kind of fit their whole schedule around, maybe pack more work on the off days so they can kind of pay attention during the actual like working crypto days. But we come back on August 5th and talk about the best swing trades. So once we've taught people like what's going to happen over the quarter, how to not lose all your money, what are some of the best coins, how can I actually so the fixed swing trades for quarter 3 is like, what are some plays that I can make some more like quicker money, not fast money, but kind of like quicker money over the next 3 months, where I can take some profits and either make some more cash for myself in stable coins, or take profits back into Bitcoin and Ethereum.
Yeah, we give you some fish. We want you to think critically about
Correct.
it, but we give you the opportunity to just take some fish, and then we teach you how to fish throughout the rest of the webinars.
Right. And then we have a Q&A, which is the whole, the webinars are typically 3 to 4 hours. These are all live webinars, kind of like we are right now, live and in person, right? We teach it all live. They are recorded. You will know, you'll hear it like, hey, recording in progress. And we answer everyone's questions. Basically, is there anything so far in the webinars that you guys didn't understand? Tell us now. And then depending on the kind of answers we're getting, and if people are really struggling with something, sometimes we adjust like a future webinar just to maybe like catch people up if people are really struggling with something. And then from there, we kind of go on to August 6th, right? Which is diversified versus concentrated portfolios, which is some question. We always end up getting these questions is like, how many coins do I want to own? I only want to own one thing, and kind of the pros and cons of it. If you just want to own Bitcoin, that's beautiful. It's going to be totally fine, but you have to be used to like, you're going to get the average BTC return. Are you comfortable with that? Yes. We have some people that tell us that, and then later on they're like,
I wish I would have gotten onto that one that I saw.
Yeah, earlier I like, well, brother, like, you wanted a very simplistic portfolio, and but it's still BTC gives great returns. It really does. There is so much power in concentration. If you concentrate on one thing, I want the 6-pack, you'll end up getting it. Oh, I want to make $100,000 a year. You'll get, if you concentrate on one goal, like I want to have one Bitcoin and I'm not going to buy any other coin until I have one Bitcoin, man, you're going to do it.
Yep.
There's so much power in that, and you're going to surprise yourself. But this also is a recipe for disaster if you're choosing a bad asset. I see people going all in on one ecosystem, like making their whole personality one ecosystem. Everything is just one thing. And if that thing messes up, oh my God, you lose all your money. You're down.
Going all in on Doge.
Doge actually survived.
Yeah,
I would say maybe more like all in on Polkadot, or Polkadot's one that's just kind of gone the wayside a little bit, but
or Cosmos or
Cosmos.
NFTs.
Oh, the NFTs have died the worst death imaginable. Yeah.
Or certain meme coins, like you could just be into some meme coin, you think it's going to hit, and it's not hot anymore, and it just kind of very slow. Like Shiba Inu did incredible in 21. It didn't really do much in the last cycle, and it's going to do way less in this one. It's just relevancy.
To wrap up here, can you guys, or is this trade secret? I was just gonna say, can you guys give me like your top 3 alts right now? Oh, these are hot alts, man.
I guess let me open the dossier real quick.
We might each be slightly different too.
Correct.
And maybe have different reasons for them. Let's see here. Outside of Bitcoin, Ethereum, and Sol, let's go with that, right?
Yeah.
In terms of, I would say one that we have a close connection to that also is a highly, I guess, like high fundamental coin is called Aerodrome. It's spelled like Aero, A-E-R-O. We know the co-founder of Aerodrome, as well as he's the CEO of Dromos Labs, which is the foundation behind it. And they're right now only on Base Chain, which is Coinbase's chain, but they've made essentially the most efficient decentralized exchange that we've ever seen in crypto. And they take as much of the money from the customers and re-put it back into the ecosystem as possible, instead of taking it out in excessive fees. And by doing that, they've created a place where all liquidity wants to go, essentially. And they've done that on Base Chain, which is an L2 of Ethereum. They're going to layer 1 Ethereum and competing with every other DEX from September. So essentially you have Uniswap, which is the Coca-Cola of all decentralized exchanges on Ethereum right now. And then you have Aerodrome, which is, that's David, right? That's Goliath. And then you have David, which is Aerodrome. They have the tech already proven out. So when they come live, they're going to eat a lot of Uniswap's lunch. And they don't even have to become the Coca-Cola of DEXs. They only have to become the Pepsi, and they still will have outsized success just by how much revenue they'll generate there. So that's one of my favorite in terms of a fundamental side. I guess to be a little quicker on the other two. Let's see here. You want to go with one? Sure. I'll come back to the other two.
I'll probably say
a lot of choices.
There's a lot of choices. So I'd probably say Tau is one that I'm looking at currently right now. So basically, memes are always so there's kind of things. There's L1s, which are like Bitcoin or Ethereum, right? Those coins always end up doing very well. Then you have meme coins. Now the hard thing with meme coins is it's hard to choose which is going to be the hot one, but there always is going to be some hot meme coins. So that sector is going to be hot. Another sector that's going to be hot is AI tokens. And one token that's being that I think is actually going to end up doing very well is called Tau, T-A-O. And it's being backed by a lot of the all-in podcast guys, and it's being backed by a lot of the people that are kind of very big in Solana are kind of backing that coin. So AI coins and coins that have agents, essentially their business model is kind of being like Perplexity, is they end up like you pay them, you're allowed to use like ChatGPT and Claude and a lot of the other big AI things while they're making their own tools and essentially robots that are going to help you trade and do all kinds of other functions. So it's kind of like they're trying to be their own app store for AI agents, while also kind of like third party selling the other AI agents that the big players are using, basically. So they're kind of using a hybrid system. We're using the big players while also developing our own thing that's specifically only for crypto people. So like we're crypto robots for dorks. Yay, right? And they have the same supply as Bitcoin. So they have much less tokens right now because they're newer, but they're using the same kind of like distribution model like Bitcoin has, so which people understand. So I really like Tau as an example. I think right now it's just slightly under $200, and I believe it's going to do well over this whole cycle, as you know, as because the big OpenAI and Claude are going to IPO. They were going to IPO this year. They decided to move it to 2027 because the SpaceX IPO was so large that it kind of sucked up a lot of the money, and kind of like, I think if they had done their IPOs, I think it would have probably crashed them. It would have been just too much money getting sucked out of the system. So that's one of the reasons why they essentially moved it over to 2027. But when those launch again, the AI coins are going to be really hot. So it's going to be something that I'm going to be looking into, maybe profiting in 2027, and then at that point possibly maybe cashing out and having a smaller position if I think they're kind of cooked at that point.
Yeah. And then another AI coin that's good, in my opinion, mainly for trading, because it has a good founder, but I don't know how long the token will stick around, is called Venice token, VVV. It's also on base chain, and VVV, the guy behind it is Eric Voorhees. And he was in crypto along with basically making simple exchanges in South America around the same time as Brian Armstrong, the guy who made Coinbase, was around. So he's kind of a crypto OG guy. So he knows how to run a project really well. And that project's had a lot of really good volatility, and then takes advantage of the AI space, as Miguel mentioned. And then the third one on my list, in terms of relevant coins for right now, a lot of them, I mean, I just chose all base coins, I guess, because the third one for me is Morpho, MORPHO. That one, there's only one large lending protocol that's made it in crypto, and it's called Aave, AAVE, and that's on Ethereum. And Morpho is Aave, but for base chain. So if you think Coinbase is going to have success, Aero, VVV, and Morpho, all three of those should gain significant market share, simply because what Coinbase is trying to do is they're trying to take all the money from the real world and from real investors, bring that into DeFi crypto. When it goes into DeFi crypto, all of that goes through Aerodrome, and then all the lending goes through Morpho, and then there'll be some speculation on the AI with VVV. So that's all 100% base chain for me on this one, because I think those are the most interesting right now. I didn't think I'd actually choose just one of the L2s, but it is what it is.
It is what it is. So the one I can recommend, so there's a caveat here. Okay, there's some risk here on this one. I really like it. I made some really good money on this coin. It's one of the main players. I think I mentioned earlier, Zcash for privacy coins. Privacy is another one that it got hot in 25. It's going to be hot again for this cycle because it's already been pumping already in the bear market. Basically, we have to wait and see until after the 28th of this month. So they're going to do a upgrade called Hardwood, which is basically going to do an accounting of like how many tokens exist. They found a bug that was possible, that they had the ability to print tokens, but they believe no tokens were printed. The market, and currently, if you look at the price of the token, it looks like the market also believes that there wasn't any tokens printed. As soon as the 28th happens and they figure out that no tokens were printed, it goes from like the currently $500 to probably $700, $800, $900 very quickly. It'll be safe to invest at that point in time. So like the risk is some people are buying it right now, and on the 28th, if they find out there's no tokens, instant profit. Yeah, it's a good trade. If tokens were printed,
opposite reaction.
It's going to, it could, if it's something like, 50,000 tokens were printed. Okay, that's not that bad. It's probably going to go to $300, right? It'll crash to $300. And at that point, I'll buy it. But if 1 million, 2 million tokens were printed, it's going to crash to $100. Then at that point, but when the upgrade is going to get rid of the ability for that to be used. So it also has the same supply as BTC, 21 million, right? So it's a very small supply, because in this day and age, the average token has 1 billion tokens. Bitcoin only has 21 million. So like even Ethereum has 120 million. So it's getting more common for tokens to have a very large amount of supply of tokens, like 1 billion, 10 billion sort of token supply. So these coins have 21 million. They can reach really high token prices because of the lack of tokens supply. So Zcash, I like it. If I were telling your users, I'd probably just tell them to wait in a few months from now to get into Zcash. But Zcash is something like, if once all the problems are fixed on it, I think it's going to do very, very well. I really believe if no tokens are printed, I believe it can get to like $4,000 to $10,000 is totally within a range of possibility for the token. But there's a little bit of risk there, but like it's something that I'm really watching right now.
Very cool. Very cool. All right, guys. Well, thank you so much. Once again, guys, the Q3 Crypto Mindset course is open for enrollment till the 28th. So time's running out already for that. The link's in the description. Where can guys find you online?
For me, it'll be on Rumble. So go over to Cultivate Crypto and How to Cultivate Crypto, the user, and then the channel. And you can find all my videos there. You could also actually go to cultivatecrypto.com/livestream and watch via our website, so that we are now absolutely unruggable. Even if Rumble was like, screw you, and we're going to take you down too. You can't get rid of me on, we're doing it Alex Jones. We got it on our website.
Perfect. Smart man.
And you can find me at Dollar Cost Crypto on YouTube, Instagram, Twitter, everywhere, basically. But YouTube is my main platform, but I'm also on Rumble as well, just making sure we have these backups. So
yeah, that's good. I'm streaming to Rumble right now too. Thanks, guys. I really appreciate it. For everyone else, tune into the podcast tomorrow morning. We're going to be bagging on single moms, which is what we like to do in this space. You know how that is. So we're going to shit on single moms tomorrow morning, 10 a.m. Eastern time. That's all we got. Get in the course, and we'll see you next time.
This has been the Come On Man podcast. Now, go out and get it.